Well, hey everyone, welcome and good afternoon to GPN Technology's year-end webinar series, Visualize Your Success in 2020. My name is Yvonne Pelkey and I will be your moderator for today's webinar. Before I introduce our featured speaker, just a few things that I'd like to go over. One, the session is being recorded, so to keep the background noise down to a minimum, we have you in listen-only mode. However, we do love questions and encourage you to utilize the chat feature within Zoom. We will have the recording available before the end of the week. If you're a current Edge Pro user, you can find the link within the Need Help section within Edge Pro. And for all attendees today, you'll receive an email with a link to the recording. For those of you that do not have Edge Pro, take a look in your chat window. You'll find a link for a free 90-day trial of Edge Pro. Towards the end of our webinar, there will be a link for a 5-question survey. Please take a moment to fill that out. Your feedback is valuable for the continued success of our webinars. Today is the 4th session of our year-end webinar, and our topic is Solving Your Toughest Challenges that Impact Patient Care Revenue. You know, when you've been in this industry for as long as I have, it's pretty special when you cross paths with someone who unknowingly has made such an impact in your professional career, but personally as well. I've had the pleasure of working with Jerry Godwin and his team for about 1.5 years, and I learned a lot about billing and coding and aging reports, credentialing, and anything else associated with the word insurance. But the one thing that stood out to me was Jerry's genuine compassion for helping every practice that he came in contact to be successful. And I am very excited, and it's my absolute pleasure to introduce our featured speaker today, Jerry Godwin.
Yvonne, thank you so much. Too kind. I appreciate it. And welcome, everyone. Glad to have you guys here today and hope you walk away with some nuggets and pearls that can help you in your business. We're going to spend some time today, and you can see the learning objectives there, but I would like to change the perspective a little bit about how people look at things in relationship to revenue cycle management. We've discovered over the last 1.5 decades working with practices through consulting and billing and things that we see the simple problems create, or the simple challenges create the major problems in the practice. And so we're going to talk about that patient care cycle. We're going to talk about common problems at the front desk, exam lane, back office, and then we're going to go through some tips for success. So through the years, we have discovered these obstacles we're going to talk about and what I like to call the insurance game. And I'm not making light of that because it is very serious, and medical insurance in particular is where we're going to spend most of our time. It's really important, like Monopoly, that you understand the rules of the game. And we see it either can cost you a lot of dollars and cents if you don't know how to do things, but it can also bring about some pretty serious compliance issues as well. So you want to keep that in the back of your mind. And as we go through this today, it's super important to understand that a lot of folks look at just the clinical aspect of care that yields the results for what we would call the revenue cycle management. I'd like to take a step back and look at it in total and understand that it's that clinical administrative cycle, if you will, of how a patient comes through your practice that impacts everything. If you've been a patient, you've had a procedure done, you've paid a deductible, and then let's say 30, 40 days later, you get a bill in the mail from the practice for a deductible that you've already paid, or a deductible that you haven't paid that you weren't informed of there. And so that leads to just bad blood, if you will, between the practice and the patient. So looking at this in total is important. Keep that in the back of your mind. So as we look at common problems, as a patient comes through the front door, information at the front desk is like the lifeblood. It sets the tone. It helps you communicate with the patient what's important to you in the form of what information you need. It's an area of compliancy as well to make sure that you're gathering up that information from the patient. And we see typically that incomplete demographics lead to big problems down the food chain, if you will, in filing a claim. So collection of those demographics, communicating to a patient of why you're getting those insurance and vision plan information, and then scanning all that information in the system and understanding that that is the route to the start of a basis of a clean claim. And as we continue to move through that area of the front desk, insurance verification and lack thereof tends to be one of the biggest problems that we see. If a patient provides you vision plan information, there is a medical insurance card behind that. So make sure that you're gathering all the information, both pieces as you can from that patient. Have you ever felt that a patient's deductible was your fault or made to feel that way because patients are like, well, you've never collected a deductible before, or I've been to an optometric practice or another optometrist and they didn't do that? We're part of the healthcare system, and when you are contractually signed up with a commercial payer, Blue Cross, whomever, or with Medicare, you're required to collect copays and deductibles. It's part of your reimbursements. And it's, as I mentioned, it's contractually required. It's a compliancy issue. So obtaining that information from a patient is, one, a requirement, two, helping you collect all the money that's due to you, but three, and more importantly, it's really helping you to communicate with your patients about fees, what their responsibilities are, and an opportunity to explain to them things that are important. And just to realize and think about, well, that jumped there. Some things to think about on the prior slide is that 70% of unpaid claims relate directly back to improper demographics and insurance information that's incorrect. So keep that in mind. A third area we look at is that patient checkout. A lot of times there is a communication breakdown or a problem in collecting the information from a patient about what their responsibilities are, or communicating to the doctor what the copay and deductibles are so they can talk to the patient if that comes up. But when that patient comes to that point of checkout, it's really an area that is an opportunity to help explain to a patient what their responsibilities are, to help establish the culture of your practice, and to be able to look at that record and be able to see if it is a medical patient, that there is a protocol that's being followed for setting follow-up visits. And I think that that's an area that's really important to be able to help establish yourself and set some policies around patient collections so your staff throughout the practice understand the rules for collecting deductibles, as an example. And then having a process and protocol. Practices that verify insurance, that help communicate to patients, here's your vision plan benefits, here's your medical insurance benefits, copay, deductible, and then jotting a note down somewhere either on a routing slip or within your EMR, a note that's made about what their deductibles and copays are and what the vision plan information is helping set the table for that communication to be consistent. And then having a policy for collecting deductibles on the backside really takes away the errors that may be present in communicating. So your staff doesn't have to guess what to do. They know what that policy and what that rule is. So good things to think about there. As we move on into the exam lane and take a look at that information that you see there on the screen, one of the things that we see that's typical is the fact that there is really no education to the patient on what the pre-testing process is. In other words, you're going to feel a puff of air, or we're checking your vision, look at the balloon. It's more transactional than educational. The second area is it's okay for staff to collect some of the history and some of the information that's going to help develop the chief complaint, but let the doctor develop that chief complaint, because patients tell doctors more, number one. And number two is it helps them, give them latitude during the course of the exam to be able to see, is there really a medical chief complaint that's present? And so that pre-test time is important to discuss what is the nature of the test, to be able to help collect information from the patient about why they're here, what type of vision problems they've had. But it's important for staff to really embrace and understand that there are 14 required or 14 elements of an eye exam. There's different requirements based upon the codes that you choose for a 9.2 code, either a comprehensive or an intermediate, or different levels for the 9.9 codes. So it's important to understand the pretest and tech roles in supporting collecting that information against those 14 elements. And so it's a great time to discuss with the patient the medical nature of the testing and help set apart why things are done the way they are and help set the expectation that you are a medically oriented practice. Some other things that we see as patients are done with their exam in the exam lane or are in the process thereof. Sometimes the patients have medical conditions are not considered for them because they've already decided, or the patient's already been told that this is just their annual eye exam. Or the staff is what I call pigeonholed somebody because of maybe the information that they're collecting from the patient as in that pretest process and what they're documenting in the chief complaint field, which we don't recommend, but just gather the information and communicate to the doctor. Or the last thing that you see there is maybe because there's not been accurate or good verification of benefits, that patient doesn't have the expectation that they could be seen medically. And so what we recommend is to be able to collect that information from the patient, have the doctor develop that chief complaint if there's medical necessity present. Don't ignore that medically oriented complaint that the patient might have, discuss it with them. And if there's issues, have the discussion with the patient about what their expectations are. And the doctor makes a determination, do they treat that day or do they see the patient as routine and then call that patient back? But what we see several times that happens is a combining of the care where maybe medical is given away as free care underneath the routine vision plan benefit. And that is something that you really don't want to do, that you want to be able to capture the care for the patient appropriately and document appropriately. So I think that that's important to consider and to understand there's some boundaries there that you want to keep in place. Some other areas that we see, we do a lot of medical record reviews, and we also pull in the claim information and the payment information to tie everything down. And what we see, there's a lot of incomplete documentation. A lot of EMRs do a great job of guiding you through the questions or boxes to check and information that you need to complete to achieve a certain level or to fulfill a requirement. But you can't replace the subjective decision-making of the doctor and of the staff in collecting the information from the patient to be able to complete that medical record. And so we see that there is just some common misunderstandings around what's required to document that record. Not in a sense of the areas of the EMR, but a sense of, does the chief complaint match the diagnosis? Was the chief complaint medically necessary? Are all the required elements there? I think those are the things that become super important to have a knowledge around. And one of the things to understand, the code chosen, for instance, a comprehensive eye exam new patient, determines the set of work that has to be done for that code for that patient. And as well applies to a 9.9 or an E&M code, whether it's a level 1 or 5. And we're not going to dive off into the appropriateness of either of those codes, but it is important to know the code drives the level of work and what's required. And so just make sure that the chief complaint's medically necessary, it's meeting the coverage criteria for the insurance carrier, whether it's Medicare or a commercial payer, that all services that are documented, or excuse me, all services performed are appropriately documented. The rendering provider is correct. We're going to talk about that a little bit more next. And that the CPT code criteria are met. In other words, those elements of documentation are taken care of. As we exit that exam lane and that claim, that patient goes up front, already checked out, you've collected the copay and the appropriate deductible. Now it's the back office's job to take a look at what's being done. And as we look at practices, we see a lot of credentialing issues that are out there. In some cases, it's practices that are set up as an individual under the doctor's social security number and not set up as a group. Or in some cases that Medicare is looking at more and more these days, and certainly in the top 3 to 4 and problems that are existing during audits today is the doctor that's providing the care on the record is billed differently so that payment can happen because maybe the doctor that provided the care is not credentialed appropriately. We call those rendering provider issues. And so some tips around how to insulate yourself against some of the things that are going on. One is make sure that you take down the insurance companies' names by provider. You can call those insurance companies and find out, is that doctor in or out of network? And you can ask them when their recredentialing date is. Always good to know when that recredentialing date is. With Medicare, you can look that up online. It's important because you may get a letter in the mail that gets, shuffled around and maybe not looked at. And so you're going to want to make sure that you don't miss a recredentialing or a revalidation date. Also make sure CAQH is kept up and attested to. You might add yourself, or if the doctor is the only one in the CAQH profile, it's always helpful to have another notifier. You can add multiple email addresses there to be able to help keep things current, keep things going forward. And so you want to attest accordingly. And usually quarterly is about what's normal. And then the other thing that you really want to look at too is the National Payment Enumerator System, or the NPI website. Look up the NPI for the individual doctors, but also for the group, and just make sure that the address information is completely accurate there. Sometimes a doctor changes locations or you add a new associate to the practice, and those things aren't tied down and nice and clean for credentialing issues. But again, the number one thing that's happening out there is providers are providing care. They're not credentialed for a plan, and that patient visit's being billed under a separate doctor's credentials, and that's a major no-no. So do your credentialing in advance for new associates, audit where you are now, and try to figure out what's existing. As we move back to the back office for the next couple of topics, it's a great time for Yvonne to pull up Edge Pro and show us how the system can be used so we can look into what types of problems may be, say, smoke indicators further away where there may be a hot spot. Yvonne?
Yeah, absolutely. So, hey, Jerry, before we move forward, you did talk, and, that was definitely something that we ran across in the time that we worked together. Yes. Was, how do you actually bill for a new doctor's services when they're not credentialed?
Yeah, it's always a tough one. So the rules are black and white. You should be not filing a claim for a non-credentialed provider, number one. But there's some scenarios there. So a brand new doctor, you want to get credentialed before they get cranking seeing patients. That's not always easy to do, but that's really the objective in which you really want to try to do. For providers that are already credentialed, let's say they're a Medicare provider at a different office, that providership is there, but they may be tied down under another doctor's taxing entity. That doctor can come over to your practice and you can submit the paperwork with a start date, and you could submit to Medicare the applications for that change, and that doctor can start seeing patients, but you cannot bill for those services until they've gotten their Medicare approval back. Medicare will backdate that approval to the date that they received the application. So then you can go back and bill those claims back to the service dates of when that doctor started. The key, though, is to make sure that what you send to Medicare is 100% accurate, because they'll stamp it as received, assign you a tracking number, and if there's any problem, they'll reject your application and send it back to you for revision, and that resets the date that they can start at. Yvonne, if I could, I saw a question pop up that somebody asked about, what about locum tenens? Locum tenens applies not to an employed doctor, but a fill-in doctor. Locum tenens, that doctor can come in and work for a 60-day calendar period, not meaning they come in once, and then maybe there's a few more times that they come in, and then they come in on day 75 for maybe the fourth time. That doesn't work that way. They begin on day 0 and they end on day 60. Locum tenens is for doctors that are out on, let's say, family medical leave, extended vacation, say they went on a mission trip for a month, maybe they've gotten sick. Those fill-in doctors can come in and bill underneath that provider's name. And there's a way to file that claim and to pin that with modifiers so it is known who is seeing the patient, and that someone else other than the billing provider is seeing that patient. So something good to think about there.
Yeah, great point, Jerry. So a couple other questions here. Like, you talked a lot, I heard you say the word compliance, and we hear that a lot. What are some of the basic things that, we should be doing? And, of all the practices that you've been in touch with, like, what are the top 3 compliance issues that you've come across?
So there's 2 buckets, if you will, of compliance. The Department of Health and Human Services is the governing body. And underneath that governing body, you have Centers for Medicare and Medicaid Services, commonly known as CMS, and you have Office of Civil Rights. The OCR, Office of Civil Rights, is who's responsible for HIPAA rules, regulations, and administration. The enforcement arm is the Office of Inspector General for anything criminal regarding that. And then under CMS, CMS has 10 Medicare contractors, and there's various types of auditors. So the 2 buckets of compliance we're talking about are, when you file a claim, you can be audited against that claim. They look at that medical record and make sure that all that ties down. CMS is responsible for that. So auditing your medical records occasionally, looking at records, making sure you're collecting copays and deductibles, verification of insurance, those types of things are important. So I think an occasional medical record review is important. The other thing is the OIG has defined that small physician practices, number 1, need to self-audit themselves, but 2, need to have a compliance plan. And really the basis of a compliance plan is setting up training, having someone who is responsible for administrating that training, making sure that all the training is documented, that you do have some policies and procedures that you live into. And so that's at the very, very basic. And Medicare provides fraud, waste, and abuse training. But on the HIPAA side of things, there's a lot of folks out there that provide free training. Compliancy Group is one of them. They have a system called The Guard. You can put your email address in their website and you get free training built around that. HIPAA and compliance. So it's important to know their sources for you. But doing nothing is a lot worse than doing something and not doing it well or not doing it right. So I think the top 3 things are get compliant with HIPAA by implementing a plan. Staff training is built around all of that, and a medical records review and billing review.
Thanks, Jerry. So as I flip over the screen here and we take a look within Edge Pro, can you give me or tell the audience, like, what are the top 5 reasons medical insurance claims don't get paid?
Yeah, I'll tell you, as we go in and dig in and look, there are so many different reasons a claim can't pay, but the number 1, or I'm going to give you the top 5, and I'm not going to give you the number 1, but typically the thing that we see the most, if you will, is just incorrect information on the claim as it relates to demographics or insurance information. So you'll get back a response on your EOB that it was the claim's missing information or the beneficiary's missing information, or eligibility has expired, as an example. We see a lot of duplicate claims because practices don't track well the claims they file. And so they may, in lieu of going in and doing research, they may just refile claims. Time limits expired. There are some carriers out there like Blue Cross, we found out in one particular state, used to have a 90-day filing limit. They're going to reduce that to 60. That came out in the newsletter. So those types of things are important. So really there's some basic things that you can avoid, but it really requires attention and system tracking to be able to do that. Make sure that doesn't happen.
Yeah, I swear I learned something new every time I talk to you. So, one of the things that I want to take a look at, and, within EdgePro, and, we're definitely not an aging report and we're not an accounting software program, but one of the things that I love in particular is, being able to kind of drill down a little bit and utilize our transaction activity report to kind of take a look and make sure that things are getting paid. So our transaction activity report, if you go into advanced reporting, you can find it here. But in this particular instance, I'm under practice breakout, because what I really want to do is I want to take a look and filter out our miscellaneous plans and really focus in on these medical only plans. When you click on this, it will open up a transaction activity report. And so what I want to do is kind of drill down, Jerry, into this particular section here, where we see that, we've got, for example, an exam, the patient paid their copay, but we're not seeing any third-party payments here. Like, what would be some of the things that we would need to take a look at?
Yeah, absolutely. That's a really good example, because it could be a number of things. It could be as simple as a payment hasn't been posted yet. So you would want to be able to take from this and go back into your accounts receivable and pull this particular patient up and look at the ledger and see what activity has happened. Then possibly go look at your clearinghouse to see if there's an ERA, electronic remittance advice, that might be available to you. Yvonne, if you would maybe click back to the presentation, because some of the things that we're talking about to drill into this transaction report, that's so helpful to be able to look at and see what's going on. A zero pay item, switch the, about if I can switch this, there we go.
Oh, there you go.
A zero pay item in that transaction report's an indicator of an issue. It could be maybe the claim wasn't filed. It's perfectly logical that they checked out, the copay was collected, and that there was a claim that wasn't yet filed. So claims not being filed is one of them. It could be that you had a denial that came through for any one of these issues that you see here on this screen. But some of the solutions that we see to what these medical claim rejection issues are is developing a process that you're looking at and scrubbing the basics of a claim. You're looking at the basic demographics, but you're also looking at any coding orientation to diagnosis, making sure that they're linked properly, proper rendering provider, and those types of things. But then as well, understanding some of your payer rules, because with Medicare, there's local coverage determinations. What does that mean? There's specific rules by Medicare region for your area that may dictate that you can't bill certain diagnosis with certain procedure codes. So understanding those types of things is important. So a zero paid item in the transaction report's an indicator of something somewhere else that you need to start your research. And if you're filing claims through a clearinghouse, it's at this point that you would want to go look at the rejections reports. That's where you go to file a claim, and the clearinghouse rejects it before it ever goes to the payer, and they're rejecting it for some reason, and you can pull a report, and that report will help you see what those problems are. Then you can go back into your EMR and fix those problems to be able to refile that claim. Some of the other things that you want to take a look at in relationship is once you file the claim, you look at the clearinghouse report and it went through. So it's off of your rejections, or it was not rejected. So that should tell you it went to the payer. A lot of the clearinghouses have ways that you can verify that the payer is processing it by running a report. But what we see is once we start seeing payments or lack thereof coming back, it's an indicator that there's a problem somewhere in the food chain, from the check-in process to where you file the claim, that there's something going on. So you need to look at, what kind of fee structures do you have against your EOBs or ERAs. Some other common problems that we see are balances are written off instead of managing denials, and that basically hides your accounts receivables in the form of write-offs. And so having some sort of a process internally to manage denials sets up accountability. And that process isn't a one-time thing. It's something that is an ongoing, should be done every week. And you should be able to walk through that AR process as just as you are every day starting your equipment, or at the end of the day, cleaning and closing and covering all of your equipment. So looking at your reimbursements against your EOBs, making sure that you're looking at your fees and auditing them on an annual basis. Payments are posted weekly if you can, no less than 2 to 3 times a month. I know for vision plans, it's usually just big bulks that you're getting at different times. And then establishing an internal process for looking at payment denials. A lot of times denials they're not dug into too deep by anybody else than the billing person. But if you have a denial, other than a non-covered item that you may have expected, like say a refraction that you bill with a medical plan, maybe it was a visual field or a fundus photo that was denied as not under contract, or benefits weren't available. That's an upstream training opportunity. A denial is a symptom of a problem within the food chain of which you're working. And so understanding what that is really important, and use those as training opportunities for your team. The other thing too is use your clearinghouse to be able to help give you information. There's some reports that you can run to look at rejections. There's reports that you can run to look at denials. And you would want to know what you have an expectation for your clean claim rate is. That is first time claim filing passing through to the payer. Just so you know, the average or expectation should be in the high 90s, as high as 98%. So 9.8 claims go through out of 10 that get filed. You can look at it that way. And on the backside, having a denial rate less than 3%, around 2.6 to 2.7% is optimal. So understanding where you get those metrics and looking at them can help you hold your billing team accountable. If you have outsourced billing, you should be asking for that data from your outsourced billing vendor, and then running your accounts receivable report to make sure that that's happening, that payments are being posted, that information is getting in the system appropriately. So that report, Yvonne, is important to be able to help you identify you need to dig deeper.
Yeah, great point.
Yeah.
I think 2 times, Jerry, when we were working with all these practices, like, I think the common thread that we found was like there was really no process in place.
Right.
And there was no process in place because it comes all back down to training,
Right.
and, putting people in a place where they really don't understand, billing and insurance and coding and those sorts of things. So when you talk about accounts receivable, definitely monthly. Is there a specific, trying to think about how I want to ask you this question. So is it, do we need to look at, obviously our insurance aging reports as well, right? By plan, is that correct?
Yes. By
And
plan,
then
by patient, yes.
Yeah, and then by patient as well, because if there's any deductibles or copays that need to be collected, that would show up on our patient aging report, right?
That is correct, yes.
Yeah.
And Yvonne, I think one of the things to consider is a lot of people think AR management, and the more experienced folks understand where I'm coming from. It's not the AR report that you're managing. You've got to go into every line item relating to that claim to identify what's going on. So it's typically a challenge to find the time, and you are looking to see where those problems lie. And so when we look at, as we go back to the beginning of this presentation and say, we want to build success, it's like compound interest in the bank. When you put $100 in the bank every month, that money continues to grow. And it's one good decision builds on another one, builds on another one. And the building blocks or the basics that we're talking about here, if you master those, then the one-off unpaid claims and those types of things become easier to manage when they're not mired down in improper insurance verification, wrong date of birth, those types of things that lead to unpaid claims. Now you're managing a much bigger problem with a lot bigger scope. So training, attention, and the details and communication is super important here.
And I think too, isn't there like a timely refile, and isn't it different with every single plan?
Yes, Medicare is 1 year from date of service. And then the payers, commercial payers vary anywhere from, like I mentioned, 60 days to 120 days. The average is 90. So it's really important to know managing this information timely is very important. And so daily filing of claims, pulling your clearinghouse reports, and keeping track of what goes through is super critical here. I think we can move to the next slide, and some of the things that we want to talk about are what are some things that you can do for success. I see a question pop up, Yvonne. Is that one that we want to take, or maybe not?
Sure. I can't see the chat though at the moment.
It just popped up. Well, it'll come through. I'm sure they'll direct us to us. But one of the things to think about, a lot of times we understand that staff goes to training or doctor goes to training and comes back in the practice. And a lot of time that information is not shared across the platform between everybody. And I think it's important to be able to have a conversation with your team and then assess what you're doing today against what your training says. And so really a gap analysis is a way, or in other words, what are we doing today? What should we be doing? And take a look at objectively what's going on in your business. So a great place to begin is using this presentation to look at your front desk performance and what they're doing, particularly built around insurance verification for medical. Being able to see that is important. The other thing that we see that doesn't happen enough, and I would say that probably 85% of the time, no one is communicating to a patient what their medical benefits cover for their eyes. Most patients don't even think about medical insurance for their eyes, like Blue Cross or whatever. They just think VSP or iMed or Davis or whomever. Well, that's my vision insurance, and there's no such thing as vision insurance. It's a use it or lose it benefit. If you break your glasses a month from now, VSP is not going to pay for them. So patients need to understand the differences between medical and vision. And secondarily, it's great to tell them, here's what your vision benefits are, here's what your medical copay, your deductible is. And the patients are going to say, why are you telling me this? And you can respond by saying, Dr. Pelkey is a medically trained doctor licensed to treat medical conditions. If she finds something today, that can be covered by your medical insurance. And having a way of educating the patient is super important. And that's why you want to develop procedures around training, develop procedures around communication, develop procedures around communicating benefits to patients. Very important. And develop procedures around helping you train staff, the 14 elements of an eye exam, what's the difference between a 9.2 code and a 9.9 code, because they, as part of the clinical staff, are responsible for helping you administrate that claim, administrate that exam. So it's super important to know. And then once you get that information down, implement that in your practice, but also implement administrative systems, accounts receivable management. How are we going to go back in and train staff on problems that we find, and keep an open communication and feedback loop within the practice? So once you decide that you're going to use a clearinghouse, that you're going to use electronic payment information, that you're going to then administrate that training back through the practice on what the findings are from processing claims. And then overlay all of that with an audit. And take an independent look at your business and have medical records review. Have somebody come in and look at your billing practices. Talk to your peers in the marketplace or your study groups, and be able to look at data. Just like you use Edge Pro data to benchmark your practice and look at different things and maybe your per patient averages and your medical division mix and those types of things. Help look at what you're doing overall. And then finally, I think the biggest thing is really reach beyond yourself for educational resources like you're doing now. This has been a great source of information. They've got some great topics prior to this and also following this and subsequent sessions. So take note of that, make your questions, and then reach out for help where needed.
Hey, Jerry, so a couple of questions and there's part one and part two of a question. So the first question, is it okay to have a fee schedule for each payer? So for example, payer A is $200 for a service and payer B pays $150 for the same service.
So go ahead, two-part question, go ahead.
Yep, and then the second part is, can you bill different fees based upon what the third party allows?
Those are two very good questions that can be answered in one thing. And it is, you have one comprehensive exam, you have one fee, regardless if you bill it to Blue Cross, if you bill it to Medicare, or you bill it to VSP, it doesn't matter. It's one fee. It's the reimbursement that you want to be looking at when you're measuring your fee schedule. So in other words, let's say you set the national average reimbursement for a comprehensive exam from Medicare is about $148. So let's say you set your fee at $155. VSP pays, in some cases, $65 to include the copay from the patient, right? So you're still billing the $155 for the comprehensive, whether it goes to Medicare, whether it goes to VSP. So your fee schedule is the same for everyone. That's a major compliancy issue. You can't change your fees based upon your payer source. The flip side of that is you want to go to your payers and you want to get your fee schedules. For Medicare and Medicaid, those are published. Medicare is published by your Medicare region, Medicaid by your state. And then for your individual commercial payers, you need to reach out to them or look in your contract that you sign. Inside your contract, sometimes it's a percentage of whatever the Medicare fee schedule was for a given year. But you can also, for some of the Anthem plans, sign up for Availty, which is an online access, and you can request fee schedules through the website from them. But you can certainly pick up the phone and request a fee schedule. It's got to happen from the practice, number one, and they'll send a fax or a letter to you with that information, and you'll want to know what that is. And those fees that they pay you, they're called allowables. That's what you're allowed to collect between the insurance company and the patient. And the patient's got two pieces of what they have to pay. That's copay and deductible. And then the insurance pays their portion. And all of that is contractually your money.
Jerry, there's a third part.
Okay.
So the third part of the question is, so all of the fees, usual and customary, need to match no matter the plan. The patient may pay a different price based upon the copay. And can you give a private pay a discount?
Yes, you can. So Medicare is very specific on the fact that you can't discount that same procedure below what Medicare pays you. So let's say you set your fee 20% above Medicare reimbursement. Your cash discount cannot be more than 20%. You can't discount below what the allowable reimbursement is. And so that's important to know. One of the things to consider, and we're kind of diving off into the weeds a little bit, but I want to do this to stir your thinking a little bit, is there are different types of exams out there. Any code that you use, like a 9.2 code or a 9.9 code, that code is a medical code, either one of those. One's focused on eyes, the other one's focused on the whole system. And you need to understand that the fee that you charge for that code is the same fee that you're going to charge everybody, whether it's cash pay or an insurance company or a vision plan. If you have a patient that is just getting a routine eye exam, then you can use a non-medical code, and those are S codes. There's some discussion about that, but those are making a resurgence now as vision plans, in particular VSP, accept those rather than the 9.2 codes. But understanding how you manage those codes and the care that you provide a patient, your codes can range from a low, or excuse me, your fees can range from a low of an established patient level 1 or a 9.9 99211 of say $25 to a high of a 99205 new patient level 5 of let's say $300. And within that range, the comprehensive eye exam or the intermediate eye exams or multiple levels fall. So if you want to treat a patient, they're a cash pay patient, you can pick a code to code, and you code to that level of care provided. So if you chose a level 3 established patient, you'd code to the rules for the level 3, and you would charge that fee to that patient and discount it based off of that. But that discounting rate cannot go below Medicare allowable, as an example. And that fee then, or the cash discounting policy, would apply across the board for all patient care exams, no matter who they are that are paying cash.
So again, I learned something new from you today. So thank you for that. So you talked in the very beginning about collecting deductibles and copays up front versus, after you bill.
At the point of checkout, though. At the point of checkout, not up front before the patient, okay. After the patient's seen, so you know the work that's done.
Got it. So here's, I think what a lot of practices struggle with is how to have that conversation with the patient, because asking somebody that to pay, a deductible of, I don't know, $250, whereas, prior to, we weren't collecting anything. We would just bill the third party, wait for the EOB to come through, and then we would bill out. So what's scripting, or how do you have that conversation with the patient beforehand?
Sure. If you'll think about where we started, when you were taking information from a patient, whether it's on the initial phone call when they're scheduling the visit, or if they're a walk-in patient, they're walking in, you're asking them for medical insurance information. Patients may push back right at that point in time saying, why are you asking for this? And that's the discussion that you have about being a medically oriented practice, and that if there's a medical condition, the doctor can bill for that condition, and it would fall under your medical insurance. When that patient then comes to check in and you've run the benefits, you can inform them at that time what their copay is, what their deductible is, and how much have they met. If you know that you're going to do special testing, then typically that special testing is subject to deductible, and you can figure out what those dollars and cents will be back to the patient. But having the discussion with the patient begins before they're ever seen. You have to set the culture. They have to know that you can bill medically, and then you have to communicate to them what the status of their benefits are, number one. Number two is everyone in the practice needs to be able to build the culture, the patient care culture around the fact that you do perform medically. Because we all know that if you see a patient medically and you try to charge them, they're not prepared for it, it really creates a lot of difficulty, and you can walk out, or a patient can walk out and be very upset and never come back. So communicating with them the medical nature of the testing and the pre-test, discussing, having the doctor put the pen down or the tablet down and say, okay, Mr. Godwin, this is what I'm seeing today. I know you're here for your routine eye exam, but this is your medical condition, and I feel it necessary that we treat this today and bill it under your medical insurance plan, or vice versa. Mr. Godwin, this is what I'm seeing. You have this medical condition. Let's say you have dry eye or blepharitis. I'm going to see you under your routine vision today. We're going to handle that exam for you under your vision plan, but I need to see you back in a week. You may give them for some lid scrubs or something that they need to start a treatment plan. But at the point of checkout, when they go to check out, if the first time they hear about their medical copay or deductible, you're going to fail. And they always make you feel like their deductible is your problem. And they pick their plan based upon, here's my premium. If a high premium means a lower deductible, lower copay, a lower premium, higher deductible, higher copay. Typically, those patients pick their plans based upon those two factors, their responsibilities, their premiums. They also, if they have a high deductible plan, those plans come with a health savings account. And it's a matter of educating that patient that you're medically oriented And just like every doctor they go see, they're going to pay a deductible for certain aspects of care within your practice. So being armed with the information and then having a policy on how you're going to, number one, are we going to collect 100%? We're going to collect 50%? Because when that patient walks out of the office, your ability to collect from them their responsibilities goes down tremendously. And I've seen statistics as high as 60% right off the bat. So you want to make sure it's all about communication and information and having your team feel comfortable with the information they have and explaining it to the patient.
Perfect. Do you think that when I'm comparing like a dedicated person in-house to handle, the back office sort of thing, the aging reports, the billing component, all of those, do you think it's better to have a dedicated employee that can handle that? Or do you find that there is a less of a denial rate if we use an outside biller? Does that make sense?
It does. It's kind of like changing the oil on your car versus doing a transmission overhaul. I mean, there's certain things that are filed that are routine and straightforward. But as you add volume to a practice, you add medical claims volume. The level of tracking, the level of scrubbing, the level of follow-up, the level of payment posting becomes super important. I think you can never completely 100% outsource the administration of claims filing and follow-up. There always has to be somebody in the house or in the practice, as I call it, the house, to be able to oversee the process and look at the numbers. Because nobody's going to manage your accounts receivable as good as you are or the business owner is. And it's easier for them to look at and administrate it. So I think you can see that the higher volume practices will add people to that process. And then it becomes not only a processing issue, but an administration process and a management problem, et cetera. Outsourcing is a really good thing. Obviously I'm a little bit impartial to that because I'm part of that world. But in reality, there are very few well-trained, well-qualified people to manage medical billing on a large scale basis. And that's where you really want to have some expertise and understanding, because it's not just about claims filing. It's about recognizing issues, trends, and developing training from that. And doctors have coding questions. And so, that's something else to look at. But having a dedicated person in the practice is a necessity to an extent. Typically on outsourcing, that person then can go do some other things as well to help the practice along, rather than just dedicating all their time on billing and coding and payment posting.
Perfect. I have a question. I'm not exactly sure how to ask this. So the question comes back from like the credentialing component of that. So I guess maybe just a reiteration of what you said earlier. So it's not okay to have an uncredentialed doctor seeing patients under a credentialed doctor's supervision. Can you have, if you do that, can you have the credentialed doctor sign off on the chart and then bill under the credentialed doctor? Or does it have to be held until that doctor is fully credentialed?
I'm going to choose Medicare as the standard bearer because they set all the rules. And then I'm going to give you a slightly different answer to what Medicare says. So Medicare is very clear. If you're not credentialed, you don't see the patient. As I mentioned, if you've got a doctor who has previous Medicare providership and they're coming into your practice and they have a PTAN number, a provider transaction identifier number, and you've submitted their application so that they can assign the payments back to the entity that they're working at, they can see patients once that application is sent and received. You just can't bill for those patients until you get their approval. That would be backdated to the date that application was seen. If they are not a Medicare provider and they are new to your practice, Medicare is clear. You do not see any patients whatsoever. Maybe they come in and work for you as a non-employee before they're employed, and they work on a local tenants basis, and they need to be licensed, and then you can add them on your insurance typically. Now, for commercial plans, you would need to call the insurance carrier. You would need to ask for their enrollment department, and you would need to have a conversation with them about the doctor and what their requirements are. In most cases, they cannot see a patient until they're credentialed. However, if you have a contracting package for the commercial plan, the doctor has signed off on that contract, submitted it in, and they have it, they may grant you special dispensation to see the patient. I know a lot of practices that have doctors that come in that may have prior credentialing status. They allow them to see patients, and then they oversee and sign off on the charts. Really, that's not an acceptable procedure, but it's very, very common, Yvonne, for them to happen. I think in medicine, this is one of the most unreasonable areas that our system has created a problem for us, where it makes it almost impossible to get a licensed provider that may have some prior credentialing status up and running and credentialing, or up and running and seeing patients while that process is going on. It's not common to us, it's common everywhere. We see it with surgeons we credential for. They can't do surgeries until they're approved, and that's big time dollars. So the rules are the rules, but I know that people make business decisions, and so that's important to know.
Yeah, for sure. I think that was the big thing that we ran across as well,
Right.
when we were working together. Another question came through, and I know we're getting right up here to the 3 o'clock hour. I'm going to go ahead and ask this question. Jerry's contact information is up on the screen. He is incredibly knowledgeable on anything related to insurance billing and coding and credentialing and all of that sort of stuff. So feel free to reach out. His email here is up on the screen, phone number as well. Jerry, the last question: when collecting the deductible, do you collect the usual and customary fee or the insurance allowable?
The insurance allowable.
So then the second part of that then becomes every third-party plan has a different allowable for each procedure. So that's going to make it a little complicated. How do you, what's your words of wisdom?
Typically you can default to, the Medicare reimbursement schedule. That's what some practices do. Other practices may choose a lesser allowable than Medicare to do so. So you're collecting a portion of it, if not all of it. We've seen practices set an expectation of, we'll collect 50% of the deductible that's due at the time of service. We'll bill, the insurance carrier. We'll get the payment information back. If there's a balance due, we'll balance that. Bill you the balance that's due. I think the important things to know is there are tools through some clearinghouses where you can do estimates. Meaning based upon the insurance allowables, you can get some estimates back on what to collect. The challenge for us is typically we do not know what procedures we're going to run unless they're coming back in for special testing or something like that. So the instances where you have a foreign body or you have something that you're doing on an emergent basis, deductible is going to apply. Typically you'll collect the allowable. If it's a Blue Cross patient, you don't know what that is. You can always look at an EOB or an ERA to what was paid before for that exam and be able to pull that back, or look at the Medicare schedule.
Yeah. Jerry, I think this is a topic that we could probably talk for hours and hours and hours on and still not even scratch the surface. But I want to thank you so much for being with us today and being part of our year-end webinar series. And I do know that we've already shot a question over to your email address, so be on the lookout for that as well.
Very good.
But yeah, so Jerry, thank you so much. And for everybody out in the audience, we appreciate you being on today, and we will see you back next week, Tuesday.
Thank you.
Until
everyone.
then, have a great week, everyone.
Have a great
Thanks, Jerry.
Thank you.
Yeah, you too. Okay.